So as you can see, this is my strategy Bible, and then this is the this is my strategy RegiBucks trading system, and then here is the breakdown. That's strategy objectives. So now I start from the higher time frame. I confirm the direction and then I come down to the lower time frames to look for areas to buy low or sell high. And then depending on the direction of the trend, then I look for confirmation. In my strategy context, when does this strategy work better? So it works better when the market is trending. That's either going up or down. When I see clear structure, not just only trend direction on higher time frames, but when market is creating clear structure on lower time frames too. And then these are the pairs: GBP USD, GBP GPY, GBP NZD, USD CAD, USD Swiss, gold, BTC, Ethereum, and then these are the time frames. So I only use daily, 4 hour, 1 hour, 30 minutes, and 15-minute time frame. And then these are the indicators: relative strength index, exponential moving average. Those are the two indicators I use, just two. And then what am I looking for in the charts? I'm looking for structure, handle of the week, trend line, psychological levels, area of interest, indicators, and then patterns. That's chart patterns or candlestick patterns. Now, what variation do you know for the setup? So, so I only know these are what I must like see before I can take the trade. So, trend line plus psychological level, that one works. Trend line break and retest, that one also works. Trend line plus area of interest, that one also works. Fibonacci 2 plus psychological level, that one works too. And then Fibonacci 2 plus area of interest, that one too works. So as you can see, I'm only using trend lines, Fibonacci levels, and then psychological levels, and then area of interest. That's what I mostly use. And then this is the trigger, like when will I enter a trade? So only when I see a trade confirmation. Candlestick patterns like engulfing, morning or evening start, chart patterns, double top or bottom, head or inverse head and shoulders. So now what is a high quality signal? An entry that has insane amount of confluences. Good stop loss entry and take profit levels and should follow all my entry rules and trading plan. What is a low quality signal? An entry that has lots of red flags. It could have good confluences, but if it is giving signs that does not go in my favor, then it is a bad trade idea. How will you enter the trade? That's the type of order. So I only use market order. I don't use limit order. I don't use stop orders. Only market orders. So when you should not trade the setup. So when it is low quality setup or does not follow my trading plan, I don't trade at all. And then how do I exit? When will you exit the trade? Where's my stop loss placed? So below or above recent structure level. And then my target is next structure level. Now why is it there? Because because I as a trader I think in probabilities. So my take profits is at the next structure level because I think that that is where most traders, banks, and institutions will be taking profits too. So if most of the money is being taken out of the market, so why would I still be holding? So it doesn't make any sense. So I take my profits based on probability. So now, this is the general market rule. Identify the overall market trend. So is it either bullish or bearish? Mark key areas, zones, or levels to buy low or sell high. Look for confluences. So once you've marked all these areas now, you should be looking for confluence, additional confluences to add to this trade. So that because the more confluences of a trade, the higher the probability that trade is going to go in that direction. And then look for confirmations to find entry points for your buyers. Ensure trade setup aligns. Look for confirmations to find entry points for your buyers. That's double top, double bottom, you get. Ensure trade setup aligns with your trading rules before entry. Always ensure that everything aligns. Like if one thing is not right about that setup, don't take it, even if it's small. If you are not trading at the right time, or if you're not having your minimum risk to reward, you do not take that trade. Just do not be interested in those kind of trades. And now let's talk about the trend direction now. So now you you are buying or selling in the market. So what you want to see is when you buy, it goes up, and when you sell, it goes down. So you want a direction. So it's either you are buying in an uptrend or selling in a downtrend. Don't try to buy in a downtrend, it doesn't make any sense. And don't try to sell in an uptrend, doesn't also make any sense. That's why I said buy low, buy low. So now what you are doing is you are buying at these points. That's what you should be doing. And then you are selling at this point. So that's what you should be doing. That's how your trend direction should be. So now, if it's, let's say now it is uptrend on the daily and uptrend on the 4 hour, the direction is already confirmed that more buyers are in the market. You get, so we should be going up. But let's now say on the daily it looks bullish. But on the 4 hour, I can see a downtrend for me, a small downtrend for me. What will I do? So this is why something called high and low of the week. So high and low of the week is basically the first two Monday candles. Like now, the first two Monday candles together. Then you mark the highest candle. You mark the highest candle of that, like the highest wick of that candle. That is your high of the week. And then low of the week is the lowest candle that's this thing, the lowest wick that candle formed. That's your low of the week. So now the first candle to break with momentum, like to break with volume, and then is able to hold above that level. That means you should be buying more. So if it's high of the week that breaks and then is able to hold above that level, that means you should be buying more. And if it's low of the week and then it's able to break below that level, that means you should be selling more. So now let's say daily is bullish and then the 4 hour is creating a small downtrend. So I'll now look at the high and low of the week. So let's say now we now break the high of the week and it's now holding above the high of the week. Now I know that okay, the direction is confirmed. We should be buying. So I won't try to sell in that from Monday to Friday. I won't try to be selling, except we are able to change direction, or I'm able to see other things that I'm able to change my bias like around this. So that's the only way I'll be selling. But normally, if it breaks the high of the week and maybe the daily is an uptrend, I'll be buying. But let's say the 4 hour is a downtrend and then price breaks the low of the week. That means I'll be selling for that week. That's just basically what makes sense. So now let me explain the concept of buying low and then selling high. So now buying low and selling high now is up onto three things that I just look out for. Horizontal support and resistance, like also area of interest. So you buy low means buy at support, sell high means sell at resistance. And then the second thing I look for is trend lines or Fibonacci tool. So now trend lines now, Most people draw their trend lines wrongly. So how do I draw mine? So now let's say I'm seeing a trend line here. First, before I can draw a trend line, I must see a three wave move. So that's basically a low, a high, higher low, and a higher high. This is the only reason I'll draw a trend line. Most people draw their trend lines like this. So when it is doing something like this, they draw their trend line and they think this is the third bounce. And what happens is most of the time you see it break and then keep falling. So you don't want to be that kind of trader. Always wait for a clear structure. That's why I said I don't just look out for the structure on the higher time frames. I look out for structure on the lower time frames. So once it has made this higher high, it comes back to the trend line. It could either retest this high. If it's retesting this high, it's much more higher probability. But you can also just retest the trend line normally and then go up. It's still the same thing. So it should shall make this three wave move. A low, a high, higher low, higher high, and then make this third bounce, and then I'll expect markets to push higher. And then for my Fibonacci tool, this is what I do. So for the Fibonacci tool now, I draw it. So for the Fibonacci tool now, I draw it, and then I take it from this low to this high. So once I take it from the low to the high, this is the entire move from the low to the high. And then Fibonacci tool, what you are basically using Fibonacci tool is to catch the retracements for that trend, whether it's uptrend or downtrend. For this case, I'm using an uptrend, for example. So let's say we have an uptrend and we're looking for places to buy low. So now Fibonacci tool will tell you, okay, this is how strong the trend is, and this is where it will likely retrace to. Is either it retraces to the 0.382 level, 0.5 or 0.618 level, and then go back to the upside. So that is what you're using Fibonacci tool to do. And then now you have psychological levels. So psychological levels are basically round off numbers in the market where institution either enters the market or they take profits at. So now let me use the best example to explain this now. So let's say now you're going to a store to buy something, and then you see that most of the times their goods are selling at 100 naira, 200, 250, 300. That is basically round of numbers that they are using to sell their products. You won't see a good of like 110 naira or 12 naira or something like that. So you mostly see that most of the times they are setting the prices at round of numbers and then they are selling it to you. So that's what basically psychological level means, where there are round of numbers on the chart where banks and most people with the most amount of money, they just take off profits or enter the market basically. So now for the confirmation now, the confirmations I want to see before I enter. So now when you see a chart pattern, either I see a double top or double bottom, I see an inverse or an inverse head and shoulders, or a triple top or a triple bottom. So these are basically the chart pattern. So a double bottom top will look like this, and then a double bottom will look like this, and then inverse head and shoulder will basically look something like this, and then you just flip it so to give you the other. This is an inverse head and shoulders. Then if you flip it, it will give you a head and shoulders, and then you have your triple top and your triple bottom. And just keep in mind this thing, that None of these things are valid until they break the neckline. So let me mark out the neckline. So this right here is the neckline of this pattern. This right here too is the neckline. Also this right here too is the neckline. And then you have this one neckline. So most times when you break the neck, when they break the neckline, they'll come back, retest, and then go higher. That's what mostly happens. So it is not a valid pattern until the neckline is broken. Now you have candlestick patterns. Now this is a must see. Like you must see it before you can even enter for any trade. You must either see a bullish or bearish engulfing morning or evening star. And just know that there are more candlestick patterns and even chart patterns sef. But this, I don't want to know everything because I cannot remember everything. I cannot see everything. You get? So I only want to focus on few things and then perfect it. You get? So I don't want to see I don't want to learn hundreds of chart patterns or candlestick patterns and then try and be using them. No. I only want to focus on the simple ones and then ones that are actually working for me. And then you can also come here to also learn the candlestick and chart patterns. If you see, this is a bullish engulfing pin bar. So that's where you can come to learn all these things. Candlestick Bible. Just search Candlestick Bible and then you see the first link. You click it and then you see this page. And then that's basically no, this psychological level is not supposed to be here. So let me erase that one off. So that's basically my confirmations. So that's basically what I want to see. Now let's come back to this place now. So when I said look for confluences, what I meant is I also trade with indicators too. You see 50 exponential moving average, which I'll explain, and then the relative strength index, RSI. So I also trade with these moving averages, and those are extra confluences that I add. So I do my analysis first, and then if I see those things happening on the chart, I just add them as extra confluences. So anything more than these things I just explained now is just an extra confluence. That's just basically what it is. So now I'm going to show you my trade, the one that I took today, and then I'm going to explain how I was able to find everything. So let me delete everything on the chart. No. Delete. Delete ones, delete the main ones. Okay. So now let me show you everything that I took. So as you can see, based on what I said if you see if you see it trending up on the daily time frame, and I always start from daily, not 15, not 30. I always start from the daily time frame. So when you see it trending up, what does it mean? It means that it's an uptrend. And then I came to the 4 hour. What did I see again? I also saw an uptrend. So it's basically confirmed I should be buying, not selling. I should be doing more of buying. So I saw an uptrend forming on the 4 hour time frame. And not only that, not only that. So now let me explain now the high and low of the week. the whole concept to it based on what I was talking about. So now when I said high low of the week, this is the 4 hour time frame now. So the first two candles on Monday, you see this is Sunday, Monday, the first two candles on Monday, you mark the highest point and you see this was the highest point of these two candles. This was the highest point. And then the low, this was the lowest point of these two candles. And as you can see, the first candle that broke it is this one. So we broke the high of the week, but we're not able to maintain it. We came back inside, so it was not really a break. Then as you can see, shortly after, we broke to the upside. So it was confirmed now that we held above it. And we should be doing more of what? Buying. It's just basically what makes sense. So it's all confirmed that we should be buying more than we should be selling. So now we come down to the lower time frames. Now that you have come down to the lower time frames, I said what? Look for areas to buy low and sell high. So now what did I see here? I saw an area of interest, an area of support or resistance that has been tested multiple times. So as you can see, resistance, 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 resistance. Now we broke above it and then we were on that level. So we're testing it again. So we're testing it again. So that's a strong area of interest. And then what did I also see? I saw a trend line. And remember what I told you. I said if price goes up, it must do what? It must break the previous high before it can draw an uptrend. It must see a three-wave move. So now I drew this trend line at this point. This is one whole move. It is counted as one whole move. Why? Because it has not broken the previous high. So now as you can see, when did we break the previous high? We broke it over here. So we are taking out the previous high. So that is when I drew the trend line. So as I saw it immediately, I drew it. And as you can see, on that same area, on that same point, market came to test along with the trend line. So this is how the strategy is. On that same point, I wait for price to come down, test that level, and that's just it. So once I waited for price to test that level, and as price came down to test that level, what do? I go down to the 30 minutes and 15-minute time frame to look for confirmation. Now at this time I went to the 15-minute time frame because sometimes not all confirmations you see on the 30-minute time frame. So that's why I use 15-minute time frame. So now as you can see here, wait, let's even go back to the 1 hour. Let me show you something. So as you can see here, so as you can see here now, we had we have been coming down. We had a really strong move down. But what happened? We stopped here and then we made the first move. And then most times price will test a place twice before it starts going up. So as you can see, we made a double bottom here. And then what do I? As soon as I saw that, it just strengthened my trade, added more confluence to it, and it just started to make more sense. And then not only that, we also saw a bullish engulfing. So now this is already a reason why you should take the trade. Like this is the main reason why you should take this trade. Once you see this bullish engulfing, if it was still here, I won't be taking the trade. If price was still at this point, I won't be taking the trade. No, you wait for your bullish engulfing, no matter how strong it is. Wait for that bullish engulfing, and then you take the trade. Make sure you wait for your candlestick confirmation first. So now time to also look for other confluences too. Now I know that you should take the trade here, but now see where things now started to even make more sense. As you can see, this is the 50 moving average. This line, this blue line, as you can see, that's the 50 EMA. That's the 50 moving average that I use. So now as you can see, we came down, we tested it once, we went up. Tested it again, went up. Now at the third time we were around that level. We tested it. What should basically happen? We should go up. That is an extra confluence to this particular trade. And then come down to the 15-minute time frame now. And you can let me show you. Let me show you how let me show you how the RSI now also added much more confluence to this trade. So now as you can see, we're coming down here. And then on this level, on this point, we had a bullish divergence. Now, a bullish or bearish divergence, I'll explain it. So a bullish divergence is basically when the chart is making, price is making lower lows, but the RSI is making higher highs. That's a bullish divergence. While a bearish divergence is basically a chart that is making higher highs, but the RSI is making lower lows. So now at this point now, we had a bullish divergence, and after a bullish divergence, it just basically means that you should buy. That's just what happens. So we had the bullish divergence, and as you can see here, the chart was making what? Higher high, while price was making lower low. And again, this is another chart pattern secret I want to tell you now. So now you see that we had a double bottom here now. So now you can see that the price of this double bottom right from this point to this point was making higher highs, while the double bottom was on the same support level. We made higher highs, and then the black crossed over the red. Once I just saw that, I entered the trade immediately. And as you can see, where did I place my stop loss? Below structure level. I placed it below structure level. Now it's not random. I placed it below this level because why? The moment price breaks this trend line is already a sign that the trade is not valid. Now, if you should now break below this support level, it's already a sign that I am wrong about this setup and the market should take me out. I don't want to be in this trade anymore. That is what the stop loss. That's why the stop loss was there in the first place. So it's not random, it's all fixed. And as you can see, like I said, place your take profits at the next level. So this is where I would have placed my take profits right at this point. I would have placed my take profits here. And as you can see, first bounce, second bounce, first bounce, second bounce, and then why am I placing it there? Because I feel markets will likely get there and start dropping because people are taking profits there. So I'm not anticipating for the market to make higher highs. No, I'm anticipating based on probability. So that is how I took this trade. Now I'm going to show you another trade that I took. The other trade I took, which was GBP AUD. That's GBP Australian dollar. So now as you can see on this trade now, on the daily, you can see that we were making what? Lower lows. We made a lower low here, we made a lower high, and then a lower low. Now what did we do? We took out this high. We took out the last high that made a lower low. That's a change of structure. You get a change of structure. So once we shift this, once we shifted the structure, what happened? We retested and then we should be going up. So the daily time frame was bullish, and then we come down to the 4 hour time frame now. As you can see, the 4 hour time frame we're doing what? We were making higher highs. We broke above this level. And what was the next move? We retested it, the high that got broken, and then we should be going up. So we're basically also bullish too. And then as you can see here, that didn't just end there. That didn't just end there. We now had the high and low of the week. Set the high of the week. Now as you can see, price had the high of the week, we had the low of the week. What happened? It broke above the high of the week. So as we broke above the high of the week, I just knew we were going to buy. Now we come down to the lower time frame. Now what are we looking for? We're looking for a trend line. If we don't see a trend line, do not trade. If you do not also see a psychological level or or a support or resistance level, also called area of interest, we do not trade. So we either see trend line of Fibonacci or psychological level or area of interest. So now at this point we saw the trend line, and then what did we also see again? We saw a psychological level of 2.06500. So as soon as I saw that, I knew we were going to buy. So now what did I do? As I drew this trend line, first bounce, second bounce, I was waiting. So right on this place now, as you can see the RSI. The RSI did not make a lower low, so it means the double bottom was good. It was a good enough double bottom. And then as you can see, once it made this bullish move, this is where I entered. Bullish engulfing. So I placed my entry here and I said market was going to go up. And then where did I place my stop loss? I placed my stop loss was below this structured level, because I know the moment market decides to start turning from here and break this last low, then I know it's not a double bottom, and then I'm wrong about the trade setup. Market should take me out. And then as I went to the 15-minute time frame, I actually did not see anything on this time frame. I just entered based on that's also 30-minute time frame. So you see, we had 30 minutes confirmation on this time, on this trade. But on the last trade, we had 15 minutes confirmation. So that is how it is sometimes. Sometimes we could have on both. So now you can see this is a morning star pattern, and then it's also an engulfing too, because we engulfed this whole move. So as we engulfed it, we entered here, and then we're putting our take profits at the what most recent level, most recent high, which was this level here. Expecting that when markets gets here, we should be out of this trade. So it's basically what makes sense that we're doing. So that's basically the breakdown on my strategy. And then as you see this strategy Bible, if you want it, it's on my Gumroad. It's You see this strategy Bible, it's on my journal, and if you want it, you can just go to gumroad.com. You can just go to regibucks.com regibucksstore.gumroad.com, and then you see the trading journal. It's for free. You don't need to pay anything. You just get it, and then you can start journaling. You basically write down All of these questions will be asked to you, and then you basically write down every single answer to them. If you do not have an answer to any of these questions, that means it means you are not ready to have a strategy. So you must be able to answer all of these questions before you can start trading in the market. So that's it. And bye for now till the next lesson.